we'll be using three core strategies. That's the old, the dollar cost averaging, that's DCA, and also diversification. So these are the three strategies we'll be looking at. Okay, and I hope my screen is clear.
Yes, the screen is clear, sir.
Okay, all right. So now let's look at move to the first slide. We could see a BTC chart. That's the Bitcoin price versus the volatility from 2017 to 2025, and with a headline why risk management. And please, while this section is going on, if maybe I'm saying something on another slide and what you can see is not actually what I'm saying on your screen, please do notify me of that because probably it will be the network glitch. Okay.
Okay.
All right. Crypto markets are highly risky, and it's more of a two-way thing. It gives high risk and also high reward at the same time, unlike traditional finance that we all know the risk and the reward are very low compared to crypto. And you see, over 90 plus percent of traders lose money due to risk. All right. So now, old actually was getting there. So let me give you a quick hint on where this word was gotten from. Odd, HODL. It's from game Koyobi. That was back in 2019 during a massive Bitcoin price crash. Where a panic trader on the Bitcoin talk forum. Yeah, they have a Bitcoin forum where conversations are being carried out for those that are involved in the Bitcoin ecosystem. And he talked in the forum and made a post and says, I'm holding. That was what he wanted to post, but he misspelled it and write I'm holding. That's HODLING. And you see, the post went viral within a short period of time. The post went viral, and automatically that word sank into everybody's heads, and that's why we're using it up to date. Okay, that's how we're using it up to date. And now, HODL is the most basic yet often the most effective strategy. Okay, it's the most basic strategy and at the same time the most effective strategy in the crypto space. And it simply means you buy and hold your crypto assets over the long term. Maybe usually 5 years or more, depends on should I say your financial states or your capabilities. That is instead of you trying to trade daily or weekly, because we have most traders that trade per minute, trades per hour, and also trades daily. Once they get their daily PNL, they just close the trade, irrespective of how much money they make or lose. Same as also weekly traders and monthly traders. But for you to effectively implement the old strategy, you need to hold for a very long period of time, for a minimum of, let me say, 5 years. Okay, now let me give you a quick example. Now, if you bought a Bitcoin worth $100, that was in 2015, and you owed that Bitcoin from 2015 up to this point. This is 2025, and Bitcoin is sitting at $116,000 right now. And if you had bought $100 in 2015, right now you should have over $10,000 and above in your wallet. That is if you successfully implemented the old strategy and give yourself 5 to 10 years holding. Why we know this might be challenging for so many people, but it's one of the best strategy that works. And now, why old works? Why do I say this works? You see, holding removes emotional reaction to short-term price drop. Within this 10 years span, Bitcoin has actually dropped drastically from that was around 1819, from over 40K dollars to $10,000, $15,000. That was like more than 50% drop. You see, but if you want to implement the old strategy, you need to stay away from making emotional decisions due to short-term price drop. You see, because you are not affected by fraud when you apply old strategy. You don't have to be affected by fraud. No matter what happens in the market, no matter the significant drop, because most times these drops occur due to some fundamentals occurring at that particular period of time. Okay, most times this dump in the crypto market is not because crypto is bad, or crypto is not going to progress, or crypto will not be moving higher, or Bitcoin will never pump. No, there are so many things that affects the market, which we call fundamentals. Okay, and most times most of the things that cause this drop might be maybe uh, let me just say economic challenge within some countries, especially the United States, because currently, as it is right now, United States decides, let me just say, 80% of what happens to the market currently, and whatever they do tells on it, either positive or negative. Okay, and now another thing why applying old strategy, you see, you should remember that not all tokens are worth holding. Not all tokens are worth holding. You can't just go to the market, the crypto market, buy any token you see and say, I'm going to keep this for 5 years. No, it does not work that way. You see, tokens like Bitcoin or Ethereum are emerging tokens with real utility. These are real utility tokens. And for that, you can decide to hold such token, but you need to avoid meme coins or tokens that have no products, no adoption, and no roadmap. Let me give you an example like the nuts token, nuts, the Telegram tap tap tap, the first project on Telegram tap tap tap, yeah, that did a very big airdrop. I knew that most people got a very huge amount then, but refused to sell. They were thinking it is going high, but the fact of it is, not token is actually useless. It's a meme coin. It has no use case. Nobody uses it for anything, and the price is nothing to tell them about, because definitely you must have lost, if not all your investment, at least 90%. You should be 90% down. Okay, so basically, holding strategy is advisable to implement, but you need to avoid making emotional decisions due to short-term market downtrend. Okay, and in the long run, you will benefit from it, no matter how long. As long as you're holding a utility coin, a utility token, definitely you won't regret the decision. But now, let's look at dollar cost averaging. Okay, before I proceed, at the end of this session, I'll be sharing some links, some possible sites we could use to run maybe some analysis and all that by the end of the slide, and possibly share this slide with you too, for those that might still want to go through it in their private time. Okay, so now let's look at the dollar cost averaging strategy, DCA. Okay, now dollar cost averaging, or DCA, simply means investing a fixed amount of money on a regular schedule, regardless of the coin's price. Okay, so now why applying DCA? The actual amount of the coin does not really matter most of the time, even though it
Sorry,
matters,
sir.
but that is not
Sorry
actually
to
your
cut you
concern.
short, sir.
Okay,
I don't know if you're on the first slide, but your slide has not been moving.
my star has not been moving.
Yes.
Give me a minute. Let me check. Why is it stuck on the first slide? Okay, let me disconnect, then present again.
Okay.
Okay. Let me share my full screen. Okay. Okay, Gracie, can you tell me what you can see right now? Can you
So
see
we
the
can
slide?
see. Yeah, so we can see the slide. The first slide.
Okay. Yeah, I just changed now. Okay, it's changed, right?
Yes.
Okay, I think we are good now. All right. So this was the old slide I just finished, and so I'll share the slide with you guys. Sorry for the network glitch previously, and this is where we are right now. This is where we are right now. That's the dollar cost averaging. All right. Like I was saying, dollar cost averaging or DCA simply means investing a fixed amount of money on a regular schedule, regardless of the cost of the coin, regardless of the price of the coin. And let me just say, this could maybe be you uh investing, let me say, $10 a week, $10 a week, or $100 a month. Whatever works for you, it all depends on your budget. It all depends on your budget. And let me use Solana for example. Let me say Solana for example. Now, Solana is currently sitting at yeah, about an hour ago, it's sitting at $200 and above. We all know the market situation currently is bullish. Okay, the market is currently bullish, and we could decide to, let me just say, buy we buy another irrespective of the price of Solana. Whether Solana goes higher than $200 or below $200, we will still buy $10 of Solana. And 2 months from now, $10. 6 weeks from now, we buy $10. 10 weeks from now, $10 in space of 2 weeks intervals. That's how DCA works. But now, why is DCA powerful? And why do people love to use this strategy? Now you see, it helps average out your entry price in sense that whenever you're doing ads and whether the price of the coin is high or low, you're still buying. And this balances your total cost in a way. Let me say now, you buy Solana when Solana is $200 and maybe in Solana maybe $170 and you buy another $10. You buy another $10. Indirectly, the quantity of Solana you bought for $10 today will be lower than the one you buy in 2 weeks time when the price comes up. Let me say you buy 0.1 Solana today for $10, and next week, because of that price drop, you will actually be buying, let me just say, 0.12 Solana for that same price. And subsequently, when the price drops and you buy more upward, you end up finding out that your on the token actually gets to balance itself in a way. And it also helps to remove emotions from a very chill as a trader. Your emotions really matters. Your emotions really matter as a trader. Okay. And now, as I was saying, it also helps remove emotions. You don't have to wait for the perfect dip. You don't have to be than it might just stop at maybe 140 and count it, change then boom, back up to 300 difficult because they will say buy the dip, buy the dip, buy the dip. But my bro, most time the dip feeling sad. Okay. But if you're applying a particular strategy, whatever happens to the market at that particular point in time concerns you not. All you need to do is follow what is already written in your books, follow what is already planned by you, and definitely you'll be fine. You just have to stick to your plan. Now, let's say, uh, imagine invest $100 every month in Ethereum now, $100 every month in Ethereum, and some months it's a 1,800, and some months Ethereum move to 2,500 over a year. That's within the space of 1 year. Ethereum has moved from $1,800 to $2,500 over a year. And now, if my average entry or your average entry is better than trying to buy the dip once, your average entry, that is you buying subsequently in patterns, is better than you trying to buy the dip at once. You see, and now there's a great tool. There's a tool we normally use. If you can see my screen at the bottom right, you can see this site there. That is DCABTC.com. Yeah, that's one of the tools we use to test this strategy using historical data. So I encourage you to try that if you have future plans on applying such strategy. And this strategy is especially useful for beginners or people with full-time jobs who can't actually monitor the market 247. Because a lot of us might be working and they don't have the time like we that are focused on this shit. Okay. And so now let's look at the table right here. It's like investment strategy, description, the risk, the gain loss, and we have the lump price and the DCA averaging. Right now, uh, lump price for the description is like to invest full amount at once. Okay, why if you're applying DCA, it means you invest in regular intervals. Examples like monthly, like I explained earlier. And for the risk, for you to go into the market with a lump sum, that is all your money, it's the risk is higher, and the market timing is also critical. If you make the wrong move, or let me say you make the right move at the wrong time, you might end up depends. And if you're applying DCA, the risks are lower and it reduces impact of volatile market trends. You actually find a way to balance your capital. Okay, if you're talking about gain, going in price, you can be substantial, and in volatile markets you might end up in a very big loss. And why if you're applying DCA, you actually get moderate gains or time. Okay, so it does not get to be very worst. Okay, now let's look at diversification strategy. And yeah, this strategy also helps a lot. I believe if most of you saw Dan Boy's post, I think some months ago, about how we made a very wrong decision some months back. What year was that again? I can't really remember, but I believe he made his first breakthrough by applying this strategy. But along the way, he made a mistake by holding some meme tokens and also refusing to sell and take some profits at a point in time. So if you haven't taken you should actually first maybe ask in the community. So probably the admins will share it with you. So you get to also educate yourself and see some other side of the world. Okay. Now diversification. This simply means spreading your investment across different types of assets. In simple terms, we just say don't put all your eggs in basket. What that way yourself, don't put your now. Why shouldn't no matter how confident you are in a coin, no matter see anything happen, anything can happen. Either uh a regulation that affect the project negatively or an act could occur in the project or market crash. About regulation, Trump uh recently got to power. A lot of people expected the market to pump massively. Yeah, a lot of people were feeling like, man, this pump is gonna start ASAP, like ASAP. But I never felt that way because I knew Trump will start by like I had my predictions. Let me not say I knew as if I see the future. Yeah, I had my prediction that Trump will actually start his tenure by maybe going after some bigger ways or brand that has one way or the other contributed to him and losing his seat, him being impeached the last time and probably banned from certain medias and all that. And that was actually what he did. And he also started with his tariffs, hitting different countries with higher tariffs, hitting some brand with higher tariffs, threatening and all that. You see, most of these regulations actually affected the market at that point in time. At that point in time, and a lot of people that probably trading features or forex, probably which lost a lot because they were all prepared for the pump with so many people trying to long the market. The such those regulations, the outcomes was really bad, and it wasn't funny for so many people. Okay, so now yeah, the sample sample strategy, I would recommend a simple sample. Yeah. Now if we look, okay, okay. Now if we look at the chart, if we look at the chart right here, about spreading all your assets in different tokens. Now we could look at let me say 60 to 70% of your token would be in the blue chip. Yeah, that, um, 60 to 70% of your guys are more down. Yeah, how about the market is no matter the regulations, find a way to survive. Actually, you get a very you are from BTC first. That's what makes the first move. You can see for the past few weeks, BTC has been the and stagnant. When Bitcoin all time high around 124 K dollars, yeah, if you're a consistent trader and you've been following the market, you should know that the next coin to make such move will be Ethereum. And when Ethereum hits 3K dollars, we were expecting it to hit 4K. It has not touched 4K yet, but it will hit 4K. Yeah, I'm not talking about BNB because I don't trade BNB more, so I actually make less analysis on their tokens. Okay, so now because just split, like I was saying, 6 to 70% of your portfolio to either Bitcoin or Ethereum, depending on how much you have. This might be mainly for the bigger boys or girls, because I if to see it's not bad, but at the same time, I time to like this that is to apply strategy get there, just save it instead of and then I'll give you in 40 days. Okay, and you could look at maybe holding some stable coins, some stable coins, either USDT, USDC, yeah, For those of us that don't are tokens that are uh 1:1 ratio to the dollar. Yes, it's a 1:1 ratio, or maybe 1 to your value does not goes down. It just be due to some little change in the market. You can just see your money at uh 99.99999 stuff like that, and also like 10% in altcoin. Mind you should avoid coins like meme coins. But look, good like Solana, Ada. Even though it is meme coins, there are some good meme coins that has done mad numbers, like crazy numbers over time. Looking at Bonk, not uh, and there are many other meme tokens too. But let me just run 300% in 24 hours and run minus 200% in the next 5 hours. So their movement is actually crazy, and they are very volatile tokens. So if you're not a degen and as a newbie, you're not I won't advise you to start investing in meme token, except you're ready to uh change your mindset and make it in a way like I just want to lose this money. Yeah. And generally, why going into crypto is to have it in mind that it's either you make money or you lose money. Yeah, it's a two-way thing. So don't feel you're meant to be making profit every day. Nah, it does not work that way. It does not work that way. Okay. These are 6 slides. These are common mistakes you should avoid. Common mistakes you should avoid as a trader. Okay, now first of all, the mistake you should avoid is chasing pump and dump coin. You should avoid chasing pump and dump coin. Just like about coins moving from like 20 time, there's 1 hour large by percent. Crazy is it will still be showing you they've moved a significant amount of percentage in 24 hours, but actually the market is actually down because when you check the chart, that's when you realize that this coin actually moved crazily in few hours and it's actually dumping right now. But because generally your chart will give you a generalized margin for the 24 hours time frame, you might not know. And you end maybe this into okay, and then going crashes. Yeah, yeah, because almost you end up not knowing what to do. You make happens for both okay, and most of these pump and dump coin you see are actually manipulated. Okay, we have market makers, we have the market makers, it actual coin bars. Those of us that knows about tech in trading and especially the Solana meme coins and gem and all that, crazy things happen there. So it's not advisable to actually chase pump and dump coin. Okay. So now next is investing rent money or taking loans. This is actually a very bad idea. Very bad for your homeless. You take loan because maybe your friend or one Twitter or one VIP group you paid in, they told you this coin will do crazy numbers. I feel like, oh, bro, let me use my school fees, let me use my house rent, let me just buy this coin and maybe it goes does not making a great loss you can't afford. And that is actually you making emotional decision out of fear because now Someone already told you this coin will do great numbers, and you and your emotions will be telling you, bro, just get this money. Make sure you buy this coin because if you don't buy it, said other part of your mind telling you to go and borrow money or use your invested money. No, telling you aren't doing it because actually, it's not advisable. Because if it goes wrong, you're going to cry. Yes, you're going to cry. I'm sure you must have seen so many stories on Twitter about those losing their school fees, house rents. This also refers to gambling too, but that's not our focus. And also ignoring security, ignoring security. That is keeping crypto on centralized exchanges is very risky. Even though it's kind of safe, but it's still highly risky because most of these exchanges it's free. It's even free and you should use maybe some you're advised to use decentralized exchanges. You could use or maybe an hardware wallet. But there was an exchange that crashed some years back. I think it's FTX. Also, subsequently, some other situation has occurred where crypto exchanges crash and most people lose their money, and up to now they can't get it back. And there have also been stories about some exchanges freezing funds from their users' wallets, maybe due to some fraudulent activity, it's like reported fraudulent activity. They could just seize your phones and that. And some exchanges have or they have access to your wallet. If anything should happen, maybe apps get compromised, they can send those funds. And think about it. This just the Bybit over hacked by North Korea. Yeah, I said hacked by North Korea because all over the news. You can't tell me Bybit lost an huge amount of money today for our declared amounts in their country treasury. So it's all Bybit can't be you can't you have no evidence to your money. It's actually the world we live in. All right, so now right might might have questions and uh, the next right.
Or if you're not too comfortable muting your mic, okay, see your hands up.
Yeah, good evening.
Yeah, thank you for this great opportunity. And yeah, I want to ask question on